Hey everyone, Steve here from the 11th channel where we talk about lucrative investment strategies and opportunities based on the requests from the 11th Collective. A lot of you have been asking me about investment fundamentals, how to streamline your research so that you maximize what you get out of it without spending too much time on every single pick, right? You want to make sure that you spend your time wisely because none of us are full-time investors. And so today we're going to talk about how to get an investment edge. So if this is the type of content you've been looking for, please hit the like button and let's get started. There's a couple of ways to do this. You either have to have insider information, illegal, or you can get an edge from competitive analysis where you look at companies similar to this one and you understand something about that company that can be applied to this one, and people haven't realized it yet, so you have an edge. That makes this opportunity a better opportunity for investing, even shorting if you really wanted to. And another popular approach, using the S1. So just to make sure everyone's on the same page, S1 is a piece of document that every company that went public will have. You can either find it on the SEC.gov website where you just search the company name or the ticker name, and the autocomplete is great. You'll absolutely find it. And then just search S-1. Or a lot of times what I do is just search S1 company name in Google, and it'll usually take you to the company's site where you can read the same thing. If a company has been public for a while, I also recommend that you read the 10K, which are basically updates to the S1 every year. These are very important documents for you guys to check out if you want to have an additional edge. This is particularly powerful when the company just went public because there's not that much information out there. All of the news media, they're pumping out the same content, and you want to have that edge other people don't. You don't want to buy the hype that every news content is pushing out. You want to get an understanding that other people don't have. And this way, you'll have an edge to figure out whether this is a safe investment, whether it's a worthwhile investment, and also potentially what is the gain to be had here. The S1 is a 400 or 500 page document that companies file when they go IPO. It has a wealth of information. But the way I read it, there are only 3 sections you need to read, and that's probably around 5 to 10 pages total that you need to read. And because I'm a strong proponent to the idea that there is a diminishing return in terms of how much research you do, I absolutely believe that you need to maximize what you look at. And so with a multi-hundred page document, I recommend these 3 sections that you should look at. The business section. The business section will tell you an overview of what the company is. It's most likely going to have a strategy section to tell you how they plan on going to market, how they plan on doing better than the competitor, the business value, the value advantage, what the product actually is. And a lot of times it'll also include the user experience if it's a literal product or a website, that kind of stuff. The second section I recommend is the risk factors section. It is very, very important for you to understand the risks of your investment. And if the risks are being highlighted by management, the company that's being run by, then you should absolutely pay even more attention to, right? They're usually pretty blunt in this section so that you have a pretty good understanding, the pretty good perspective of what the risks are. You need to figure out whether you can leverage this information to either dig deeper or it's enough for you to be comfortable in making this investment or avoid this investment. This section is probably even more important than the business overview. And then the last section I highly recommend is the management section, where the management team basically talks about a lot of the stuff that sometimes are redundant, sometimes are already talked about in the risk factors and the business section, but it's important for you to read this just in case you missed anything in terms of value proposition, business differentiation. And another important part about this section is that it breaks down how you can read the financials. So when you look at a lump sum of, let's say, $100 million under research and development, you understand what they're actually researching and developing. This will create an edge for you so that you can figure out whether they're wasting money or you agree with how they're spending their money. So when you're reading this, the first couple of times it'll be a pain in the ass, but you'll get better and better and faster, and it'll become more efficient so you know what to read and what to avoid, how to streamline it. For example, I tend to read the first sentence and the last sentence to figure out whether the paragraph is worth reading. Kind of English 101 here. And to demonstrate all of these points, I've created a case study for Virgin Galactic because it's the company that I'm currently looking at myself. It just won IPO. It is about to go to market. You know, for $250,000 a ticket, I want to know whether it's worthwhile, whether it's a gimmick or not. Everyone's just talking about the space hype, either saying that it's really, really good or really, really dangerous. I want to know the in-betweens. I want to know whether this investment is worthwhile for me. I want to get that edge. So I've created the rest of this video to show you what I focused on, what I'm looking at, and how I made this decision. So if you're curious about seeing me read S1 in action, or you're just curious about the end result of whether I think Virgin Galactic is worth investing in, please keep watching. If you haven't done so already, hit that like button and let's get started.